The commodity market is evolving and changing. And it comes back to the thing called pricing power. People want to be able to have a price for their assets in a place of their choice, not based on someone else's decision somewhere else in another region that's got nothing to do with them, which could be politics, right? It could be geopolitics. It could be financial stimulus. It could be tariffs. There's so many things that can impact it.
Welcome to Smarter Markets, a weekly podcast featuring the icons and entrepreneurs of technology, commodities and finance, ranting on the inadequacies of our systems and riffing on ideas for how to solve them. Together, we examine the questions: are we facing a crisis of information or a crisis of trust? And will building smarter markets be the antidote? This episode is brought to you in part by Abaxx Technologies. AI agents are fundamentally changing how people and organizations interact with computers and the internet. A race is underway to establish the path that will govern the nature of these interactions. Abaxx Technologies introduces Abaxx Labs as its center for engaging with the developer community through the release of open source software to promote a path that empowers users to maintain control of their identity, data, and agents in digital spaces. Abaxx Labs' first release is the Agents++ library, a subset of Abaxx's ID++ software development kit that has been tuned for use with AI agents. Download Agents++ on GitHub today at github.com/AbaxxLabs. That's github.com/AbaxxLabs.
Welcome back to Summer Playlist 2026 on Smarter Markets. I'm Dave Greely, Chief Economist at Abaxx Technologies. Our guest today is Russell Robertson, Chief Business Development Officer at Abaxx Exchange and Clearinghouse in Singapore. We'll be discussing his perspective on India's evolving role in the gold and silver markets and its growing importance to the global commodities derivatives industry. We'll also be talking about the developing new network of markets and trading corridors stretching from India to the Middle East, Hong Kong, Thailand, and Singapore, and the opportunities it creates. Hello, Russ. Welcome back to Smarter Markets.
Thanks, Dave. Good to see you.
It's good to see you from halfway around the world. This is the first time we've been able to chat on the podcast one-on-one. It was great having you with Joe and Tom when we were all in Singapore together. So thank you for being here. I was talking with Sunil Kashyap last week about all of the developments in the gold and silver markets in Asia, from the strong growth in trading activity in Abaxx Exchange's gold and silver futures markets, to the revitalization of Hong Kong's gold futures markets, to Singapore's plans to create a Local Singapore OTC clearing market. But we were only able to really touch on what's happening in India, which will be transformational not only to the gold and silver markets, but really for how commodities are traded globally. And I thought that would be a great place to pick up the conversation with you. And in just the past few weeks alone, you've been a speaker at the first Global Commodity Conclave in Mumbai and the 23rd India Gold Conference in Goa. Why are you spending so much time in India, and why do you feel it's so important to be there now?
Thanks, Dave. It's nice to be here with you and having a bit more of an intimate and romantic conversation rather than with other people. So India is really interesting for us. So since I joined Abaxx, India has been somewhere where I've been very keen to do more work. Initially, it's due to the high liquidity of volume that comes from India generally, and the fact they're building a very significant free zone from a place called GIFT, which is in Ahmedabad. So that's the free zone of India. That's been allowing Indian traders to have access to the external markets, which has shown some significant growth over time. And if we look at something like CME Group, almost 20% of their volume comes from that sector now. So it's very significant. And with what's going on for us, we have a successful gold contract now that focuses very much on Singapore kilobars and the prices of that gold in that area. That's just creating even more interest from these regions. So India, Hong Kong, Singapore, and Dubai particularly, which are all very much gold hubs, but all in slightly different ways. So the big word of the week has been corridor. How do you connect the corridors? So this is ultimately what we're looking to do now. How do we use what we're doing in Singapore, allow people to arbitrage these different basis risks between different regions, and ultimately could make efficient trading opportunities for people to move metal around?
At these conferences. Curious what the conversation's been. You've mentioned corridor, and I want to come back to that, but what's been the focus of conversation as you've been in India the past few weeks?
The fascinating thing is the sheer numbers of people taking part in these events. I mean, India really does know how to put on a conference. It's very impressive. So just at the MCX one last week, I couldn't give you an exact number, but it's in multiple to thousands of people coming and going and taking a deep interest in particularly precious metals, the bits that I was focusing on. Other thing too, electricity market becoming a very big thing here in India, coal markets, which a lot of people deem to be something of the past, but still very relevant. But for the precious metal side and the bit that I've been looking at, it's very much, I say educational, but I don't mean that in a derogatory way. I mean very much in a high level way. The region is opening up, and specifically like the ASEAN region, where we're based in Singapore and the surrounding areas, is metal has historically been traded on a New York, London basis. That is changing and becoming more of a regional thing. The people want to know what that is. How do I take metal from those places and put them into areas like Singapore and be able to move it around and ultimately make money from the transactions? So it's a new thing for a lot of people. And this is ultimately what we're trying to achieve at these conferences. And people are striving towards us for that answer too. It's a collective thing.
And I noticed a lot of the programs and the themes are around the physical and the financial. And clearly, India has been a very important center for the physical gold markets and physical gold demand over many years and decades. How is the approach to the financial markets changing now?
So there is significant financial traders in the region. I mean, we're talking large numbers. Historically, these types of firms would focus on highly liquid products in the financial space, right? So we're talking about equity markets, interest rate futures, treasury markets, these very established type things. These guys are growing on a very exponential rate, and they're looking for other ways to ultimately find an arbitrage and take advantage of market differentials. In the bigger market, that has become very tight. There's a lot of people in those markets. So something like gold, for example, amongst commodities in general, really, you've got a very significant physical market, people trading on a London price plus or minus premium and discounts, moving metal from one place to the other. A lot of the time, the price is based on their name, who they are, what your credit lines are, this type of thing, which is not uncommon for commodity markets. But with what Abaxx does particularly, we build commodity futures markets, which allow people to access that price at a given place, at a given time, rather than having to potentially not get as good a price just because you don't have a better relationship with someone. So we're trying to equalize that and create a price discovery mechanism that's open, transparent for everybody.
And when we had Josh Chow on from Yong'an in Singapore a few weeks ago, one emphasis he had was how China is opening up its markets to international traders, and international traders are wanting to have more access to what's happening in China. Do you see a similar dynamic playing out in India currently?
Yeah, very much so. It's different, but it's the same. In Singapore, we have an expression, same, but different. It is very similar because there is this concept of closed market. So if I'm on the ground in India, I'm not supposed to have access to international markets, which is why they developed Gift City, because it's a free zone. So I can move my trading entity into Gift City and give me access to international markets. If you're in the mainland, then you trade national markets such as MCX and other stock markets and things like that. So the concept of opening up will be done in their own way. China has a very particular way of doing it. It's opening up, but it's still difficult. So it takes time to do these things. But there's definitely the interest and the discussions and the desire to find other ways to do things, which is what Abaxx thrives on, is we're here to do exactly that.
And how do you see the relationships developing between local exchanges like MCX and more international exchanges like Abaxx?
It goes back to the regional price discovery, right? So if you think of some of the big international exchanges that are out there, their focus is not always on these elements. You could argue it too small. But to me, in my job, it's the utmost importance to find a way to connect these markets. As we talked about before in our group chat, I'm not someone who necessarily believes that there's going to be some huge mega benchmark around the corner, but I do believe that there's going to be a number of smaller ones which equate to the big one. And that's ultimately what this is going to look like. How does Abaxx, which has the Singapore market price for gold, create connectivity for other regional places to bring that together? Now, we've always talked about the global south and the connectivity between China, India, South America, the Middle East. And when I say China, I'm talking about the ASEAN region. That commodity flow between those places is huge. And if you look down deeply enough into the price discovery mechanisms and the pricing benchmarks that cover that stuff, it's not actually relevant or relative to a lot of that movement of commodity.
And I want to come back to something you said earlier, which is roughly 20% of the trading on CME is coming from India at this point, or at least trading in like the financial derivatives. It's a pretty staggering number for people who haven't thought about it before. How do you see India's role in commodities trading changing, and how important do you think it's eventually going to be?
It's hugely significant. I mean, something we heard at the MCX conference is, and it's very similar expression you hear quite often with the Chinese trading firms, and India's interaction in international markets is going to be very significant. The concept of price discovery mechanism and pricing power is very similar to the way the Chinese think about their international markets. How do they take part in their own price discovery? And that is quite a powerful statement, because if you think about electricity markets, and I just mentioned that because it come up a lot this week, India buys electricity and power on other countries' pricing basis. Now, if you're a large government of a large developing country, you don't really want to be doing that. You want to have control, using that as a big word, but not in the small word, but having some sort of influence on how your people taking their utilities. So this is where the market is evolving to allow these types of large developing countries, who are still ultimately swing buyers and sellers, and they have a massive amount of inflows and outflows. They should have more control over that subject. And it's not about control in a negative sense. It's about just being able to manage your balance, right?
As India does take on a larger role, for people who are listening who may have more of a US or European centric perspective on the commodity markets and commodities trading, what do they need to understand about how these markets work in India? What's same, different? What's similar? What's different?
I mean, similarly, the people and how we consume is the same. I think human beings generally just consume in a similar way. But if you think about the population numbers, they're very different. We're talking about huge multiples of people in India and China versus in the countries of Europe. And that alone just shows the amount of necessity of goods coming in. But also, these countries still have manufacturing. But if you look at the UK, where I'm from, there isn't really the concept of manufacturing anymore. It's a financial state. It's a financial services country. So that again shows you the big difference between what's going on in these places versus maybe what's going on in Europe.
And when you look at the approach being taken in India versus the approach being taken in China, do you find them more similar or more different?
At a high level, I find them to be similar. On a business perspective, when you're working with clients, it's different. But a lot of the time, that's cultural. So, that's probably a conversation for another day. And I mean it in utmost respect, but it's just different ways of dealing with different cultures when you do business. And we just have to be very aware of that. It's something you learn over time, that if you go to do a meeting in Beijing, it's going to be a little bit different to how you do one in Mumbai. And there's no good or bad to that. It's just different. One of the other things to be very aware of is the demographics. And the demographics of India is the population very young, a very young population. And there's a lot of people below the age of 35. Right? It's very similar to, if we look at the Middle East, in Saudi, for example, it's very similar to that too. Very young population. Whereas Europe and other parts of the world, the US particularly, you're talking about an average age being 20 years older. And that makes a big difference too in the way these things are going to progress over the next decade.
And you had mentioned earlier a point that I think is really important, that we see developing this whole network of new markets really stretching from India to the Middle East, Hong Kong, Thailand, Singapore. How important is this development?
Again, I've used this a lot, but it's the utmost importance. As someone who needs to buy something, right, whatever it may be, I want to know what that's going to cost me where I am. Why should I buy something based on the cost of it in another country without factoring in the concept of shipping or freight in any form, whether that's a ship or an aeroplane, local taxes? And that makes a difference, right? The price of a gold bar is not the same in every place. And a lot of people have a concept that, I'll buy gold. There's one price for gold. There really isn't. Price difference between the US and Singapore can range between $5 and $20 different. The price in Hong Kong can be $2 negative. So this is very significant. And it's not always about location. There's also the concept of quality. But Singapore and Abaxx focuses on something called the London Good Delivery Bar, 4.9 quality. So we have a standard for what we look at. If we look at stuff in Dubai particularly, it's just different. It's 995 and they have the UAE Good Delivery. India has the India Good Delivery list. So again, that has an impact on the price of something. So this is the important bit to us. And this is the important bit to all of these different countries, because we're all looking for that corridor. How do we connect these places up to be able to allow people to move product or commodity or an asset between places in a way that is truly understood? And just because I might be long gold in Singapore and short gold in India for whatever reason, why should I get penalized for that if I have equal and equivalent positions in different places? So again, that's a very complex subject, but at a high level, something we'd love to find an answer to.
And before you came to Abaxx, you're at the Dubai Mercantile Exchange. How have you seen this developing over the course of your career?
So the DME was a very different beast, right? The DME, which then became the GME, the Saudi government, the Tadawul Group bought that business to turn it into what was ultimately going to be the Middle East Commodities Exchange. But while I was there, we focused very much on one thing, and that is crude oil coming out of Omani government. And that was known as a benchmark for Middle East crude. So if you look at the way that most Middle East governments price their crude oil, it's based on an Oman/Dubai basis. So the futures market in Dubai for us was very focused on physical delivery. So people trade to make price discovery. It trades for very short periods in a day, but it was the biggest physically delivered futures contract in the world with a large amount of commercial activity taking place. So around 20% of all our volume went to physical delivery. So we were delivering 20 million barrels of crude onto a boat each month through the exchange. So, which is the ultimate goal of Abaxx too. We want to build commercial volume. We want people to move metal from one place to another on a fair and transparent price that we create. And that's really the significance between the two. The thing that I noticed grow was very similar to precious metals in a way, and how we're interacting with bullion traders and jewelers and these types of firms who don't always see the necessity for hedging. They just come from an era where they didn't have to do that. And I can tell you at a conference last year, after speaking in depth about hedging and pricing, someone putting their hand up and saying to me, "Why do I need to hedge? The price of gold always goes up." And it was a fascinating thing to hear, because not long after, the price of gold fell $1,000. So I hope that guy did listen to me and do a hedge.
It sounds like US real estate in the 2000s.
Yeah, it's very similar sort of thing. So yes, sometimes it's disappointing to have a hedge on because things do move in your way, but you can't always rely on that. And this is what we saw with the crude oil market. We call it the sour crude market, the medium sour barrel, which ultimately is the appetite of the Chinese, right? They buy 80% of all of that flow. However, if you go and speak to a lot of those clients and what they were doing, they didn't necessarily always have what I would call the best hedge. And again, I don't mean that in a bad way, it's just different. So we spent a lot of time educating, just showing how you could do things slightly differently. And it was just about, okay, you're buying a barrel of Omani oil, you should hedge it on the DME. You're going to have a good trade because you are a refinery. You're not a trading entity. And this is a similar concept to what we're seeing today. So the overlaps are there. The energy markets move forward. The bullion market probably has still got a little bit of way to go. Someone could look online now and see how much futures are trading on gold. It's a lot, but I can tell you there's still a lot of unhedged volume out there. And a lot of the time it's because it's fractured, because it's in different places doing different things.
It really comes out speaking with you how much time you've spent kind of astride the physical markets and the financial markets. and working with commercials, the tremendous amount of deliveries when you were in Dubai. How did that influence your thinking on how you build these markets and grow commercial participation?
So I came into this in a slightly different way. So my background originally was I was a futures trader. I was what we used to call a finger clicker. So I was sitting there trading arbitrage spreads between 5 and 10 year interest rate futures in Germany. Right? It was a very liquid market. There was a number of people that did it back in those days. And you'd be trading lots of volume, quite significant volume, which gave me an insight into, the bid offer spread. What does it cost me to buy one lot and sell a one lot, or lose a tick, make a tick, and a true basis of what my P&L is on a very day basis, a very microsecond in time. When you start to work with physical traders, it's different, right? They have what I would call a range of what they think is acceptable. And for me, as someone who was like hypersensitive about making a tick or losing a tick, was quite surprising because they're talking about, oh yeah, 20 ticks or 30 ticks or 50 ticks was acceptable, and sometimes more than that, actually. So that was my initial way in, was to just say to these people, 50 ticks is not really the best for you. Maybe you could get that down to 10 or 5 and still look after your book and your portfolio. And that takes some time for people to get used to that. There's huge amounts of corporate politics. We're talking about psychology of people, the payment structures of some of these traders have. There's so many things you have to take into view. But my view has always been just make sure that people get an honest answer and they can get the data that they need to see, and show them truly how one thing can be different to another. And rather than talking a story or a narrative, let's just have a quantitative discussion about this. Maybe I can help. And there is another side to that. There's the physical flow, which is something I learned a lot about. They call it the back-to-back chain, the supply chain. There's a lot that goes into that. So we have to be very mindful about when we do something. It's not as simple as to say, hey, don't use that anymore, use this, because there could be a 20-year contract on the back of that that's priced in a different way. Help that person understand that to get out of that into something else, what does that cost them? It's very complex, but it's just the ultimate goal in my mind has always been, what's your P&L? And that tends to work, I find it. Someone always cares about their P&L. So I can tell you one story without naming any names, but one of the types of counterparties I work very closely with, I just liked the guy, and he was very open to listening and learning. I left my previous firm, and 6 months after, bumped into him somewhere and like, Ross, guess what? I've just been given my own proprietary trading book in a state-owned company. And to me, that was quite an emotional moment, because this guy had been listening and been learning, and he'd proved to his superiors that there was a way to not only manage a physical book that the refinery was using, but to optimize it, right? And optimization of these people can be very significant.
And I wanted to come back, Russ, to this idea of these corridors that are forming and this network of markets. And I was wondering if you could break it down a little bit by commodity. Like, are there certain areas where you're seeing that happen more quickly, whether it's gold and silver or energy or industrial metals? Just curious where you see them at that stage.
I mean, all of the above. So precious metals, we can start on that. Sunil talked about this, but the inputs and the focus we're seeing now from government in different regions is fascinating. And it's something that's probably relatively new at this level. Singapore has this thing called Project Lion, which you can all go and Google. It's not a secret. The idea is that Singapore government wants Singapore to be a custodian center. I mean, it's more complex than that, but in a short form. So what does that mean? That means that Singapore is building ecosystem, the network of vaulting systems, trading capabilities, financing, to make Singapore a hub for precious metals for Asia, which is why Abaxx is here, right? And we're ahead of that curve quite nicely. So we have a successful futures contract that creates a price every day, and we will develop that further. Hong Kong is doing something very similar. So the Hong Kong government, which is also backed by the Bank of China, so it's slightly more political, but Chinese are buying a lot of gold, Singapore government. Hong Kong is a very significant gateway into China as part of its internationalization. So now we have Hong Kong and Singapore, which is not that far apart from each other, have similar, same but different, again, methodologies happening. That's great for us because that means that traders now have the opportunity to arbitrage between those two places. And arbitrage is not just a financial transaction, it's the cost of a bar in a different place at a given time based on supply and demand fundamentals. So if China needs to buy gold, the natural place to do it is to move it into Hong Kong. China doesn't really export gold. I think it comes out of a little place called Yunnan. There's not much of it comes out, most of it goes in, right? So you have that. And if that supply and demand fundamental changes, now you can move that stuff from Hong Kong back into Singapore and vice versa. So that's your corridor. And that's a very fascinating development in what I think is geographically close place. You have a similar principle happening in Dubai. So the DMCC in Dubai, it has a similar function and that's growing very rapidly. And Dubai is very similar to connecting into India. So you have the Gift City operation growing, and that's been growing significantly over the past 10 years, really. When you think about energy, just very quickly, I mean, energy market has the potential to change very rapidly. If you see what's happening in the Middle East at the moment, the Straits of Hormuz and all these sort of things, that's a very significant change to pricing benchmarks. So as an ex-DME guy who focused very much on Omani crude oil, was strategically different because Oman is actually outside of the Straits of Hormuz. So therefore, and that was done very much by design, so you didn't have to get caught in that waterway. But that's a lot of disruption. And that disruption, what happened to that, just to put some context around it, basic level for a trader, when we used to look at the spread between Oman and Dubai oil, that could be 1 or 2 cents, 5 cents, 10 cents, worst case. After that conflict started, that spread became $40. I mean, we're talking 1 cent to $40. It's insanely difficult to manage that price movement. And how do you even hedge that? So now you have this concept where many people are looking at what does that mean? Are those pricing benchmarks impacted? The answer is very clearly yes. And we've seen that already with someone like ADNOC, which is one of the big producers in the region, starting to use Dubai benchmark again, which back in 2021, they were very much against it. And now they've flipped back to it. Is Dubai benchmark the best thing? It's certainly incorporated into many things and it gives the governments and the producers a lot of flexibility. But does that help your buyers, like the Chinese and the Indians? So this is where the potential is for new corridors and new flows and new benchmarks. So it's happening in many different places. So the commodity market is evolving and changing. And it comes back to this thing called pricing power. People want to be able to have a price for their assets in a place of their choice, not based on someone else's decision somewhere else in another region that's got nothing to do with them, which could be politics, right? It could be geopolitics. It could be financial stimulus. It could be tariffs. There's so many things that can impact it.
And while you've been in India recently, you've also been speaking at a number of conferences, including the Global Commodities Conclave, the India Gold Conference. What was your message and how has it been received?
It's been surprisingly well received. So I don't mind sharing that as someone who worked for a smaller startup exchange that was a startup and now I would say is a growing business, sometimes it takes a bit to get your voice heard because people generally in our markets are used to doing certain things and it takes time for people to understand the benefits of doing something different, right? So this is a time when I was speaking on a panel and I was on there with, I would say, the old guard, the CME Group, EX, Baltic Exchange, and MCX. This is centuries of business there versus Abaxx at 5, I would say. And one of the things that really stood out is the desire and interest in regional price activity. And it was something that the bigger exchanges are looking at for sure, but there seemed to be an interest in what we were doing. One of the anecdotes I would like to share, which makes me smile to today, is the anchor, who was the CNBC India anchor, a very significant person, asked on the panel, what are you going to be watching out for in the next year or 2 years? And it went down the list. The CME and EX had very particular questions and answers related to their products. MCX said Abaxx, one word statement, Abaxx. And to me, that was a glowing reference of what we're doing and it has a meaning and people are starting to respect it. So I was very happy to hear that. And I think it's quite a glowing representation of our contribution, however small some people might think that might be, but it's having an impact. And I think that can only grow from here.
I wanted to ask you the same question. the last question that I asked Sunil last week, and then I'll let you get back to all the work you have, which is, what has you most excited about the development of the gold and silver market in Asia? And what are you looking forward to not only watching unfold, but helping to unfold?
I think it's really a lot to do with just the opening up of the business, because there's huge amounts of gold and silver out there in circulation, traded. If you look at the amount of gold that's actually ever been mined in the world, it's quite small. It's like an Olympic swimming pool. That's all that exists. So when we think about gold as an asset class that's traded, it's traded in a very much OTC space, yet that could get unlocked. I've had a discussion with someone from the Turkish government not that long ago. They're trying to find a way. How do we unlock the amount of gold that's under people's mattresses? I digress slightly, but that is ultimately what the statement was. And we're talking about large amounts, right? Something like 8,000 tons of gold that's not in the system. So once we start to get that stuff moving, people start to think about it as an investment asset rather than just something you sit on, that's going to be very different. And you're going to see a much bigger global market taking place, like we do see in other things, currencies, for example. Gold will probably get to that at some point, in my opinion. And governments are already starting to take notice of that. And once we build our corridors and connectivities, it could be a very interesting thing. It'll be the dollar, it'll be the pound, it'll be Bitcoin, it'll be gold. It's going to be sitting there as your liquid assets.
Thanks again to Russell Robertson, Chief Business Development Officer at Abaxx Exchange and Clearinghouse in Singapore. We hope you enjoyed the episode. We'll be back next week with another episode of Summer Playlist 2026. We hope you'll join us.
This episode is brought to you in part by Abaxx Technologies. AI agents are fundamentally changing how people and organizations interact with computers and the internet. A race is underway to establish the path that will govern the nature of these interactions. Abaxx Technologies introduces Abaxx Labs as its center for engaging with the developer community through the release of open source software to promote a path that empowers users to maintain control of their identity, data, and agents in digital spaces. Abaxx Labs' first release is the Agents++ library, a subset of Abaxx's ID++ software development kit that has been tuned for use with AI agents. Download Agents++ on GitHub today at github.com/AbaxxLabs. That's github.com/AbaxxLabs. That concludes this week's episode of Smarter Markets by Abaxx. For episode transcripts and additional episode information, including research, editorial, and video content, please visit smartermarkets.media. Please help more people discover the podcast by leaving a review on Apple Podcast, Spotify, YouTube, or your favorite podcast platform. Smarter Markets is presented for informational and entertainment purposes only. The information presented on Smarter Markets should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Smarter Markets are those of the participants and do not necessarily reflect those of the show's hosts or producer. Smarter Markets, its hosts, guests, employees, and producer, Abaxx Technologies, shall not be held liable for losses resulting from investment decisions based on informational viewpoints presented on Smarter Markets. Thank you for listening, and please join us again next week.